This is Gary Schnitke, and this is a 5-minute farmdoc daily dealing with the release of USDA's long-run forecast for corn, soybeans, and wheat. Every year, USDA releases its baseline projections, which give forecasts for the next 10 years. This is usually done in February, or the final report is released in February, near the time of the USDA Agricultural Outlook Forum's release. This year, they released a new updated baseline in November 2020. This would be for 2020 through 2030. So this is the initial look at what will be finally released in February 2021. We're going to make a comparison from November forecast after COVID and all the other incidences that have impacted supply and demand this year to the February forecast, which occurred and was made before COVID-19 control measures were in place. Starting with corn, over the past several years, market year average price, we calculated the market year average price from 2013 to 2019. That happens to be $3.67. The 2013 to 2019 period was picked because that was after the buildup of ethanol use corn use in ethanol. We hit much higher prices during that ethanol build, with $6.89 being the highest in 2012. Obviously, the drought played into that high price as well. If we're looking at the forecast and comparing them to that $3.67 average from 2013 to 2019, the November forecast comes up towards the end with a $3.55 price. This is actually a little bit lower than what the February forecast was, which was $3.60. So what we're seeing in the out years, the November forecast is a bit, not much, but a bit more pessimistic. The higher prices of the November forecast in early years likely has to do with the production problems, particularly in Iowa, that happened in 2020. If we're looking at soybeans, the average price from 2013 to 2019 was $9.70. Again, though, that $9.70 price was lower than some of the higher prices that we experienced before 2013. $14.40 was a high in 2012, that drought year again being a major impact. 2019, the average market year average price, and this is a U.S. price, was $8.57. You can see the November forecasts are much higher than the February forecast. November forecast towards the end equal $9.80. This happens to be very close to the 2013-2019 average of $9.70. Prior to this, in the February forecast, those prices were roughly 95 cents lower than the November forecast. In essence, USDA is looking at exports, particularly for Indochina, seeing that they're rebounding and likely saying something to the effect that the trade war is largely over and we're returning back to that 2013-2019 normal. Wheat forecast for November is 5.10. That happens to be very close to the 2013-2019 average of 5.16. Overall, February and November forecast periods are not that much difference from February to November, according to USDA. A major difference now that we are looking at the February to November forecast is that the November forecast had that increase in price for soybeans and not much change for corn and wheat. And as a result, the soybean-to-corn price ratio has increased quite a lot. If we're looking at that soybean-to-corn price ratio, generally the higher it is, the higher the soybean price relative to the corn is, we tend to see soybean profitability increase relative to corn profitability. November forecasts are much higher than that 2.64 average for 2013 to 2019, whereas the February forecasts were below that, and again, saying corn was likely more profitable than soybeans relative to the November forecast. As a result, USDA is projecting a price response or a difference in price response per acreage be based from the February to the November forecast In essence, USDA added more soybeans to its forecast. Corn and wheat rate remained roughly the same. Ironically, the soybean forecast from USDA would have soybean acres larger than corn acres, something that has happened very rarely in the past. USDA then is projecting, if you look at those long-run prices, $3.55 for corn, $9.80 for soybeans, $5.10 for wheat. Again, those are long-run forecasts and give you a pretty good feel of what USDA is thinking about as a long run, and those prices would be realistic to use in budgeting. We would also suggest using a more conservative look. $3.40 for corn, $9 for soybeans, $4.60 for wheat. Again, being more conservative, believing that COVID will likely have longer tails and that trade war has done some long-term damage. You can read more about this in the FarmDoc Daily that is linked to the description in this YouTube video.